This show is sponsored by Amplify ETFs, delivering expanded investment opportunities for investors seeking growth, income, and managed risk strategies. To learn more, visit amplifyetfs.com.
This is the Amplify Quarterly Update on the Blackswan Growth and Treasury Core ETF, symbol SWAN. My name is Jay Coulter, and joining me for this update is Dan Cupkovic, the Director of Investments at Argy. Dan, thanks for coming on.
No problem. Thank you, Jay.
All right. So since this is the first episode we've done in this Amplify series, could you tell us a little bit about the construction methodology of SWAN?
Yeah, so to be clear, Argy is a sub-advisor for the SWAN ETF as well as ISWN, and Amplify is utilizing, our portfolio construction methodology that we've done internally on SMAs for several years now. Essentially, in a nutshell, SWAN has 90% of the portfolio in very safe fixed income, being U.S. Treasury bonds, with a laddered approach and a target duration of the 10-year Treasury. And then 10% of the portfolio is designed to be in risk on call options, being leap call options, so they're long-term call options on the S&P 500 index.
Excellent. So when did the ETF launch?
So the ETF launched back actually on Election Day 2018. So it was not, it was coincidental. It was kind of interesting that it happened, but back in November of 2018.
Okay. And then the index, how often does it rebalance? And is there anything financial advisors should be aware of about the construction or rebalance methodology?
Yeah, so the rebalance methodology is twice a year. It's in December and in June, and it reconstitutes both the fixed income component of the index as well as the call option component. I will say the risky call option component is a little bit nuanced in the sense that it's sort of like a watch that ticks throughout time. So for instance, when June approaches and we have to rebalance the June option, we do that, but we leave the December one unchanged. So we're not fully rebalancing all of the calls. We only rebalance half of them as to not really try to realize excess capital gains. So it's done a little bit more kind of mechanical approach on the options.
Is it 100% rules-based?
It is 100% rules-based.
Excellent. So before we get into talking about the first quarter of 2021, given the way this portfolio is constructed, I think we'd be remiss if we didn't talk about the first quarter of last year and how the strategy held up. Could you walk us through what happened in the first quarter of 2020?
Yeah, so absolutely. I mean, the Blackswan held true to its name during kind of the COVID crisis last March. We saw equity indices drop between 30 and 40+%. And I believe the peak to trough to SWAN was more in the 6, 7, 8% range. As far as how much it came down peak to trough. So it held true to its name, did very well compared to some of the other low volatility indices and other kind of competitors in the area. And I think a lot of people were happy with that, which is why we saw quite a few asset flows last year during the COVID crisis. Counter to that, seeing that 2019, we were up 22% on SWAN and change. 2020 was 16+%. So very solid years. 2021 has been a bit more of a challenge. And the main reason for that has nothing to do with equities. It's the fact that interest rates have been going up. So the 10-year Treasury is down around 4% year to date. And when you have 90% of your portfolios exposed to these treasuries, it's going to be a headwind for the strategy. So we're still above break even. Year to date, we're up roughly 1.6% currently. But those treasuries kind of struggling in the rising rates, it has been a challenge for us thus far in 21.
Well, if it wasn't a challenge, then you'd be doing something wrong. Because it'd be going against the methodology of the index. It's no different than what advisors have found in their standard 60-40 portfolios. But that's not the core of what this particular ETF is meant to deliver in a portfolio, correct?
Exactly. I mean, at the end of the day, if you owned any fixed income short of maybe 1 or 2 treasuries, you are going to experience some challenging times so far in 21. So it's not dissimilar to what you experience in a traditional 50-50, 60-40 portfolio. It's just being aware of how this is constructed and the mechanics so that nobody's surprised, both advisors and clients alike.
Excellent. So as we sit here in the second quarter of 2021, how do you see this ETF? Where do you see its place in a portfolio through the rest of the year?
Yeah, so I mean, I definitely think that this portfolio can be used in a lot of ways. and that's kind of the plus and the minus of Black Swan, is in the event that you're kind of worried about the equity markets getting frothy, you're seeing some bubbles on the horizon, multiples are getting high, you're worried about a crash, a normalized crash, you can create a lower correlation environment in your kind of globally diversified or US based portfolio, where you carve SWAN out as a sleeve of that portfolio, let's say between 5 and 20%, to lower risk, increase Sharpe ratios, and get better returns than fixed income only, typically, is what we'd expect for the long run for something like SWAN. So we've seen it kind of in both of those dry powder scenarios and kind of a higher Sharpe ratio, diversification play in 2021.
Excellent. So Dan, earlier this year, Amplify launched ISWN, symbol ISWN. You guys are the sub-advisor here as well. Walk us through the portfolio construction of this product.
Yeah, so really it's a sister fund to SWAN. The primary difference, really the only difference, is our equity exposure component. So the treasuries are fundamentally the same. There's some minor nuance differences, but at the end of the day, we want to get exposure to the IFA index, Europe, Asia, and the Far East. So international equity-like exposure with the US treasuries. So if you're a believer in international markets, or you have some exposure to an international developed segment, this could be used as that equity hedge, as that correlation play in those environments. So very similar structure, really just focusing on that IFA index as opposed to the S&P 500 in SWAN.
Excellent. Dan, we appreciate you coming on. To learn more about SWAN and ISWN, please visit amplifyetfs.com. That's amplifyetfs.com.
Thanks, Jay.